Good afternoon, everybody. It is 12:59 p.m. on this first day of the trading week, Monday, also the first day of October. First day of the trade week, first day of the month, first of lots of things. So it's pretty awesome. Okay, so some big stuff going on today. Former President Bill Clinton is speaking at, or did he already speak? I don't remember. At some Ripple conference. You know what? I don't pay attention to that stuff that much. So more of a time and price and pattern kind of a guy. Not much on the trying to catch the noise trades, which is really not a good way to trade. All right. What I want to go over today is the importance of dates and time related to like specific and important highs and lows. Hello, Luis. By the way, hope you guys all had a good weekend. And we're gonna analyze the date and the time relationship for things and how they relate to Gann days. So, this is the square of 9 tool. Let me get rid of these lines right here. So this, the light green lines, those are the angles of a square. So 90, 180, 270, and then back to 360, and then the trine angles here. So every 60 degrees. Sorry, every 120 degrees. So 120, 240, and then 360, and then there's account for a 49 days and 144 days, which are important levels. But I'll just clear this out. Restore default settings. So we're good. What I want to do is look at the dates that are important to Bitcoin. So, for example, let's look at the all-time high for Bitcoin. And actually, I'm going to get a brand new chart. Candlestick chart for Bitcoin. All right, so blank chart. Change the colors to what am I saying? Close position. There we go. All right, now let's take the all-time high. When was that? That was on December 17th. So I'm just going to go to the square of 9. I'm going to look for December. What I'm going to do is, here's 0 degrees. I'm just going to drag December 17th over here to 0. So December 17th is right there. So now we have December 17th at 0 degrees. But now what I want to do is I want to identify the dates that are at cardinal and angle and 45 degree points. So we'll start off with 90 degrees, and that is March 16th. And if I'm using TradingView, I could do that, but I'll just do it over here. So March 16th, vertical line, March 16th. There we go. There's a date, and then 180 degrees from December 17th is June 17th. Oops. Oh, shit. I just closed it. Dang it. Give me a second to get it back. Okay, so what did I say? March 16th and June 17th? Yeah. March 16th. June 17th. And then I want the 270, which falls on December 22nd. Wait, that is not correct at all. What happened here? That looks better. September 18th, which was just a little bit ago. September 18th. So those are the cardinal points of Bitcoin from this date, from December 17th. This is 90 degrees. Then we have 180 and 270. Now we're going to put the 45-degree angles in. And where are we at? So 45 degrees is January 30th. I'm just going to color those black. Followed by what in the world? There we go. 45, then 120, sorry, 135 is May 1st. Followed by all the way over here. 225 is August 3rd. And finally, the last one, which is going to be probably in what, November somewhere. 270, sorry, not 270, 315 is November 2nd. All right. Cool. So when we plot out the cardinal points and then the diagonal points, this is the confluence we get. It does show up at certain swings. There are certain, it's near some certain highs, but these are important dates nonetheless from this high. But what we can do also is look for, moves off of the yearly low, which is actually back here in July, and we could do that as well. But more importantly is doing this for the date that an instrument started trading. So people who do the stocks, they'll use like the first day that the New York Stock Exchange ever opened, or the U.S. stock market. So we're talking back in like 1773. It was before the U.S. got independence, but for Bitcoin, we're in Bitcoin's birthday season. So depending on how you view, like, Bitcoin's birthday is either it's either August 18th was when Satoshi Nakamoto released his white paper, or Bitcoin.org was registered on August 18th, and then on November, when was the first Genesis block mined? Was that in November. I think it was November 1st. Genesis block. It really depends on January 3rd, 2009. So it depends. So we're going to do the same thing here, but I want to look at the, like, plotting out the dates that are going to be relevant and important based on that. So let's go with August 8th. Sorry, August 18th is the first one. June, July, August 18th. Right there. So we're going to do the same thing, but I'll do this in trading view for now. And we'll get to these charts. New chart. And instead of floating back and forth here, I'll just drag this off to my screen below and do it that way. Pull up Bitcoin. Daily chart. Okay, so our first date that we're starting with is, if we're like looking at the birthday of Bitcoin, if you are familiar with so I'm just moving some things around here. Okay, so 90 degrees, we've got, this is November 17th. So we'll go back to November 17th. And then 180 degrees from August 18th, we get February 11th. And then 270 degrees, we get May 17th. And then finally back to August 18th. And then the 45 angle relationships. October 3rd. Which is coming up. Followed by January 2nd. And we've got April 1st. April 1st. And finally, we're looking at July 2nd. Oops. Okay, so looking at it from this perspective, these are these swing dates. These swing dates I like as far as looking at this in 2017, this looks pretty good. One more we want to look at is, we're going to look at the November, crap. I want to make sure I get this right. These things get messed up if you don't have the right ones. Wait, I think, wasn't the Genesis block on the 3rd of January? Damn it. Yeah, 3rd of January. Okay. So going to take the square of 9. It's off the screen right now, but I'm going to change this to January 3rd. All right. I'm going to use the same chart, just going to make the vertical lines a little thinner. You know what, though? This actually, that is not going to deviate much at all now that I think about it. Because we have January 3rd, and then we get February 17th. Followed by April 3rd. Yeah, there's not going to be a lot of deviation, so that won't change. The point I'm trying to make, October 2nd is the day I've marked my chart. I'm excited to see what happens. Why? You have October 2nd for care to share. I think October is going to be Rocktober for cryptos. Be the total opposite for U.S. equities. I don't know. It's hard to correlate these things like using Gann's financial timetable that we looked at last week. We know that there's a panic phase that starts somewhere between 2019 and 2020, where there's really high stock prices, and then things fall down. I mean, we could be there already. Who knows? The other way to square things out here is by doing it according to yearly highs and yearly lows. And that is actually probably one of the more useful ways to square things out. And so if you don't have a square of 9, you can do this really easily. You can just type in Google, because numbers of days are the same as the angles. So, if let's say we know the yearly high in Bitcoin was on for 2018 is on the 6th of January. All right. So the 6th of January is a high. And then we really just look 45 days from there. And then another 45 days, and then another 45 days, and then you get the pattern. 45 plus 45 is 90, plus 45 is 135, plus 45 is 180, plus 45 is 225, plus 45 is 270, plus 45 is 315, plus 45 is 360. So You don't have to use this to do that. You can plot it out. And in fact, I had written a Excel thing for this, and I cannot find the damn thing. I bet it's on one of my laptops. So one of the easier ways, instead of what I was doing, is we can get a where's the cycle tool on here? Right here. Cyclic lines. And so first I just want to measure from the high of 2018, which is back in January, believe it or not. I want to count out 45 days. Good enough. Consequently, 45 days from the high is this big low down here. Within 45 within 45 days. All right, go back. Need to go to January 6th. Make sure I have that right. Okay. And then really just take the cycle tool. And we just slide this over. And then every 45 degrees, every 45 days or degrees, we'll get a line plotted. And it's got a pretty good it's doing a pretty good job of indicating where we see turns in markets as far as if they're at swings. It helps to label them. So, because the angles, God, why can't I think of the name of them? The cardinal directions, 90, 180, 270 and 0 or 360, north, west, south, and east. Those are not as powerful in Bitcoin as it seems. The 45, the 135. So if we just put those labels on here, so this is the 45-degree angle, followed by the 90-degree angle, followed by the 135. Oh. Then the 180. And the 225. Damn it, why does it do that? And finally the 315. Swing high, swing low, minor high within a downtrend, in a low area. I mean, it's actually technically kind of a swing high in a shorter trend, but we're within some yearly lows by another low. And we're coming right up against, on the 3rd of October, we're coming right up against another angle. So, and then 45 days from now is, from here, is we're looking all the way over at November 17th. So, this really kind of reinforces Gann's work on the relationship of 45 degrees and day counts, and how important and effective they are in isolating trade entries, because you can combine time cycles like this. This is a form of a time cycle. You can utilize this in conjunction with other time, price, and pattern, and it's a pretty powerful tool to use. It's really fascinating stuff. If we were to do it off of the high, like we just did, that's what we get. I think it's equally compelling and fun to look at. You know, I mean, we're sitting here to swing low. Definitely, I can see us seeing October a pretty steep rise going into it. That's very, very, very likely. If we wanted to do it off of the that August 18th, if we go back all the way to 2017, August 18th, it was near a top, kind of a minor top here. November 16th, right before the big breakout, swing low was found here. Swing low, and we're at another swing low. I mean, I don't know about you guys, but this kind of stuff's pretty awesome. You can really spot a lot of moves. So, speaking of moves, there is... Ooh, what is Ripple doing? Got a little bit of a drop in our markets on Mondays, but surprisingly, this is one of the fewer... It's not like a really big, bad, bloody Monday. It's just a acting like a Monday. But over the last few hours, we've actually had quite a bit of price action come in, and looks to be some supportive price action here. Ethereum, is Ethereum catching a bid? Yes, it is. Oh, wow, that jumped up pretty nicely there. Cool. I'm going to go over something with you that is going to be a pretty big cheat code for the market. And I have my notes somewhere. Right over here. I think you may have heard me reference the composite index before. And if you haven't, the composite index, if you want to, you know, be in the now with your technical analysis friends, tell them that they should not use the RSI anymore, that they should use the composite index. All right. The reason for that is that the composite index, if I want to pull it up here, I'm having a Monday as well. And there we go. Okay. This is from Constance Brown's to get her the masters in whatever it is, forget. But the relative strength index has an issue. Okay, it does not develop divergences against long periods of price data. Okay, it doesn't do a very good job of it. It doesn't display some divergence signals against certain price moves. It just is not as effective as it could be. And that's not Wilder's fault. He developed probably one of the most important technical tools in existence, the RSI, and it's still used a lot. And the composite index is a relatively new. I mean, this is just kind of proof of people who practice something and have shown it to be effective. It doesn't become part of academia until much later. The composite index is one of those. Just put this in perspective. Technical analysis is still a really, really new field. I mean, we're talking only like 30 years if you want to be gracious. As a field that's gotten, you know, a lot more respect in the financial industry. Technical analysis is a new field, and the Ichimoku system is older than World War II, and that just got into American markets back in the early 2000s, late 90s, early 2000s. The Ichimoku system came to the West from Japan. The composite index is a very new one as well. I think she finished. She got it done in the 80s, but it really didn't become. It's a standard indicator in Bloomberg, but it's not everywhere else. And essentially what we have with the composite index is it has a momentum calculation within it to make the RSI more effective. So the composite index has a momentum component that makes it catch divergences not only in price but against the RSI. So you actually use the RSI and the composite index to identify divergences within these two oscillators, okay? We're going to do that right now. We're going to try and spot some. So again, this is really cool stuff. You won't get this anywhere else. And the composite index is available on TradingView. But you can't type in composite index. You won't get the right one. It's Constance Brown. Just type in Constance. And this is the one you want from Lazy Bear. Constance Brown Composite Index. That's right here. That's the one you want. And then this is just regular RSI. I added these EMAs onto the RSI, but that's, I'll just hide those for now. And actually we can hide the other averages here too. So now we're just left with the composite index and the RSI. And you can tell that, you know, for the most part, they do look pretty similar, right? But there are times when they don't. And that's what we really want to spot. For instance, one's sitting out here staring at me. We have a lower high in the composite index. And then we have a higher low, a higher high in the RSI and a lower high in the composite index. This is bearish divergence. Regular bearish divergence. Is anybody here unfamiliar with divergences? It's okay if you're not familiar with them. That's perfectly fine because it's not something you really see a lot of. Like people will talk about divergences in the moving average, convergence, divergence. Don't use the MACD. Ugh. Technical analysis has leapt forward significantly since the MACD. Okay, bullish divergence. Quick little crash course. Let's use the RSI. Bullish divergence occurs near the end of some type of down move, and it's when you see prices where there's a sorry, I was talking about bearish divergence in the last chart, not bullish divergence. Bullish divergence happens when you have a lower low in price and a higher low in the oscillator. So if we look right here, this is an example of bullish divergence, regular bullish divergence. So right here we see that we have lower lows in price, but higher lows in our oscillator. See that? That's a divergence. In regular bullish divergence, what this tells us is that there may be a change in the trend. Okay, it turns a lagging indicator into a leading indicator. Okay, and there's all sorts of methods on when you should take the trade, but divergences themselves are not enough of a signal to take a trade. There's other things you've got to look for. We'll get to that later, but that's what we're looking for in regular bullish divergence. Bearish divergence is when that's what we have here. That's when you have a higher high in price. Pretend that the RSI is price. We have a higher high in price and a lower high in the oscillator. That's bearish divergence. So that occurs at the end of an uptrend. And I bet we have one over here, which we do. At the all-time high, we have a higher high. Not a huge difference, but it's still there. Or flat. If you have a flat, if you have a double top and a lower high, that's still bearish divergence. So this is an example of bearish divergence when we have higher high in price and a lower high in the oscillator. Bearish divergence. Then there's hidden divergence, and those are used inside a current trend. So hidden divergence is, and we're always comparing things highs and lows. Okay, so if we're looking for some type of bearish divergence, we're comparing a high in price and highs in price and highs in the oscillator. If we're comparing regular bearish divergence, we're comparing lows against price and lows in the oscillator and lows in price. Hidden divergence, this doesn't mean that it's like sneaky and hiding from you. It means that it is inside a current trend. So if we're looking for hidden bullish divergence, so hidden bullish divergence should show up during a bull move. Okay? Why is this acting kind of sheepish? And so what we're looking for in hidden bullish divergence is we're looking for higher lows, but then in the oscillator we want lower highs. And sometimes these ones are a little more difficult to spot. Lower lows in price, but higher lows in the oscillator. This is sort of one. We have lower lows in price, but higher rising lows in the oscillator. That is an example of hidden bullish divergence. Hidden bearish divergence is generally appear during a down move. And the thing is, with hidden divergence, you really only want to pay attention to hidden divergences if it's within the trend. So if there's hidden bullish divergences, which do show up during a bear move, you really want to focus only on hidden bearish divergences. So Here we have an established downtrend. This is current price action. We're looking for lower highs in price and higher highs in the oscillator. That is essentially what we've got going here. You could call this a double top even. So we have a double top in these highs, but actually it's lower. And then we have higher highs in our oscillator. So this is hidden bearish divergence. If you ever wonder, you know, when you're trading down and you ever wonder, does something feel like it's just topping out? Like, I'm sure a lot of people can relate to this when you have this big down move and then something starts to trade away from it. It starts off pretty good, and then it just feels like it's not going anywhere. Like it feels like it peters out, or it just kind of loses its momentum. That is exactly what is happening. It's losing its momentum. That's just telling us that while there is volume and momentum involved and strength behind the move, it's not being reflected in price. So this is hidden divergence, which means that you have a continuation of the prior trend, which is down. All right. Taking those same principles, we want to use those when we're looking at the composite index and the RSI, where we treat the RSI like price. So we should actually flip these around. So the RSI is like our chart, like candlesticks, and then the composite index is just our oscillator. So we're looking for divergences between the RSI and the composite index. And so this is on the hourly chart. Actually, I should do this on the 4-hour. More people have been burned using oscillators. Like new traders get burned using oscillators all the time, especially ones. So a bounded oscillator is the RSI, where it only goes between 0 and 100. The composite index is unbounded, okay? It goes above 100 and it can go negative. All right? Bounded versus unbounded. So if I'm looking at the 4-hour chart, I want to spot a divergence of some sort. Is there anything right here showing up? No. Let's look over here. Not really. Well, there is sort of right here. This is a lower low, and this is a higher low. We'll come back and take a look at these. There's a lower high and a higher high. Obviously something going on here. This is a higher high followed by a lower high. And again, you want to make sure that these are lining up together. So the divergence should be within, you know, it should be the same here. You can't really extend it down over here. You got to keep it within the same points. Well, we have some business going on here where we have a lower low in price, but a higher low in oscillator. Again, we're treating the RSI as like a candlestick chart. This is a cool. When you get a triple, these are usually, when you get a triple divergence like this, you get triple peaks or triple troughs. That's usually like, that is like a gift the market just gave you. Because if you see the third one form and you trade the direction of the divergence, you have a really high probability of that trade working out. I mean, those are money makers, especially on longer term charts like daily, weekly, and monthly. I mean, triple, they're great. So let's just take a look at these for right now and bring this back to price, but I don't want to use that chart. I want to use... Ah, shit, I gotta use that chart, but I can get rid of it. Oh, mother fracker. Just want to hide them. Okay. Wait. Where did all my drawings go? Damn it, that's right. No, what did I do? Shite. Did I just pull a stupid? I think I might have pulled a stupid. Damn it. That cannot be right. Well, hell. Fudge. All right. We'll just do it again. Lower high, higher high, lower high. Oh, no, that's all right. Let's see, lows here. Well, that's 1, 2. Higher low. Sorry, higher high, lower high. Higher low, lower low. Got some peaks here, lower highs, flat to higher highs. And almost done. Sorry about that. I don't know what the hell I did. We've got peaks there, peaks there. Once you practice looking for divergences, they get easier and easier to spot. Well, we have a flat there, followed by a higher high here. And higher high, lower high. All right, let's take those for now. So then we want to look at our chart. And see how prices responded. So looking at this area here, this is telling us that we had this is regular bullish divergence, where we have the, well, it doesn't look like it from here. Oh, yeah, double bottom followed by higher high tells us that there's bullish activity on this one. So we did see prices trade up. Look over here, regular bearish divergence. As we got to here, did it trade down? Yes, it did. Prices moved down. We have regular bearish divergence. Higher highs in the RSI, lower highs in the composite index. See prices, what did they do? Kind of traded flat, then moved down. Higher high, lower high, fall down. Then we had this activity here where we encountered regular bullish divergence, a lower high in the RSI, higher high, lower lows in the RSI, higher lows in the composite index that yielded rising prices. I mean, it's divergences in the RSI and the composite index are going to be very, very awesome tools in your trading. And I guarantee you, you won't find people doing this or talking about this. You know, I mean, this is really a great, because people who trade who are new get introduced to the RSI and the MACD. Those are out of the two indicators that are used the most, even by a lot of professionals. It's the RSI and the MACD. But Constance Brown and a lot of other technical analysts, they recognize that the RSI has a really, it's very, very limited. It does not account for long stretches and doesn't account for momentum. The composite index does, okay? The RSI is like Windows 3.0. The composite index is like Windows 10. That's what we're talking about. And what's fascinating about this too is this is also kind of a mind game. It's also like a psychological tool, because a lot of the times when you're spotting these divergences, especially when you're getting into situations where you see prices are trying to find an example here of looking for an extreme. Okay, so you've got traders who are trying to automatically go long because we're in an oversold condition, which things can remain oversold for quite a while. That's what we're looking for. Was this, what's the value here? This is 21. That's not right. Can't use that one. It's like the minute I want to find an example, then I'm just not seeing one. Another thing that you can do with the RSI and the composite index is identify similar peaks and troughs. We'll use a Litecoin for this one maybe. Or yeah, we'll use Ethereum. How about Ethereum? Oh shit, I wasn't using Ethereum. Oh my god. That was the issue. Oh shit. Being a little stupid. Okay, let's just check these out quick. But triple bearish divergence. Higher high in the RSI, 3 lower highs in the composite index. Big drop in price. See that? We had a little bullish divergence happen here. A little bit of relief. Didn't happen. You will spot a lot of flags and pennants will form divergences. We had higher highs, higher lows in the higher lows in price here, but lower highs in the oscillator. Means that is hidden bullish divergence. So did prices move higher? Yes, they did. Zippity doo dah over here. Okay, this is current price action. All right. One of the other things that you can do, and I encourage everybody to do this. Oops. When you get the RSI and the composite index on your chart, move them up, squeeze that chart so that you can't see it. I bet TradingView does not like me doing that because it's trying to fit all this into that little area. Cryptocurrency. Krakens. All right. Look for similar deep troughs and peaks. All right. Forex Lens, folks, this is familiar to you. We've done this before. So we've got a peak there, a peak there. Okay, 2 similar kinds of peaks. That's what we're looking for. Same here. Yeah, maybe. Trough here. This will also help you spot divergences as you're going along through these because they'll trigger for you. You'll just kind of spot them that way. It's like, oh, okay, this looks like this one's moving down, but this one looks like it's moving up. It's good to pay attention to those. We've got, probably assume safely that prices fell down from here. Okay. All right, so then we can squeeze them back down. And look and see how prices responded. We did travel up a little bit, but then that bearish, here's that regular bearish divergence. We had the higher highs in the RSI, lower highs in the composite index. I mean, the RSI did not spot that divergence. Okay? Notice how the RSI was, I mean, as we painted a higher high here, the RSI did it as well. The composite index caught the divergence. It catches things the RSI can't. It's not that it won't catch things, it's just that it can't catch the things that the composite index does. Let's look over here. We have the extreme values here. Little bit of buying pressure before falling down again. Over here, see we have extremes in the RSI, similar peak shape in the composite index. Did see selling pressure happen there, selling pressure here. And similar there. We had one right here too. Okay. Oh, see right now in Ethereum, we have divergence currently happening right now live. We have a higher low in the RSI and a lower low in the composite index. That is that is hidden bullish divergence. And on the 4-hour chart, this is a long enough move where we can consider this to be a minor uptrend, even though, you know, on a broad look here, this could be considered just part of a large bear flag, but the length of time this has spent going up, we could consider this to be part of a bull move. And so there's hidden divergence on the 4-hour, which tells us that, yeah, in real time, divergences are not easy. They're really easy to spot, like post action. But currently we do have one, and this is tradable. Compare that against like market geometry or the, oh wait. So if I compare, let's just, you know, we know that there's that divergence in here. Let me squeeze these down a little bit. When I compare this to the market geometry, this is a screaming buy. Why? Because this minor 2/8 harmonic and this 45-degree angle right here, this is a strong support zone, followed by the fact that we closed 2 candles above the 4/8 minor harmonic. This is just a very, the circle here in this geometry acted as a support zone as well. So the fact that we had this hidden bullish divergence form on this geometry is kind of like a dub big red truck to trade it. The only reason that the trade is valid is because the divergence, the hidden bullish divergence itself is not enough of a condition to go long. You have to find other confirming pieces of analysis. So this is what I'm seeing. And I have an arrow pointing towards a breakout zone. I would expect us to get probably to the 240-ish by the 3rd, probably higher. We'll see. We'll see how prices respond starting, because it's October, new month. If we take a look at the Ichimoku system, that's a dollar index. Let's look at Ethereum. Here's the 4-hour chart to the top right. Oh, hell yeah. That hidden bullish divergence that we looked at in those oscillators. Oh, this is a screaming buy. Let's just look at this chart. We can put the Ichimoku system onto this 4-hour chart. Hide all the drawing tools. We know that there's hidden bullish divergence right here as we're speaking. And yeah. Support found on the baseline and the top of the cloud. Yup, that, and we're forming a looks like we could be forming a bullish pivot here. The two outside candlesticks have higher lows and higher highs than the center. We would ideally close above the open and the close of the prior. We'll see if volume can step in to propel it higher from here, but definitely this is looking like a bullish trade. Ooh. Okay, sorry about that. Turn my phone down. Okay, so this example, it's pretty nice that we had this show up here. Usually you wait for the close. I mean, what does it look like on the hourly? Oh, we're back above those on the hour. That's pretty good. Flat bottom followed by a rising high. Yeah, it's hidden bullish divergence on the 1 hour as well. So yeah, those are good signs. Perfect. Okay. There was one other thing I wanted to go over. Shoot. Oh, well. Let's look at some trades on the Ichimoku. Ethereum, this is pretty healthy looking. That we have, I mean, it's actually not the greatest setup here on the daily. This looks pretty bearish as far as just candlestick pattern. However, prices have maintained above the conversion and the baseline. They've closed above this now for, if we close the day out above the conversion and the base, that's a good sign. There's a TK cross. When that happens on a daily chart, especially if it's been such a long time since we had that happen the last time, it's a pretty good sign that you see a good drive and a good push up. The 4 hour chart, we could be entering a really nice long opportunity on the 4 hour. You know, all the other conditions are met for going long on the 4 hour chart for Ethereum. We just need the lagging span to get out of the cloud, and that would be at around the 236 zone. So I'll put that out there. Okay. And then we've got a 60-minute chart. Yeah, we're all right there. Let's check out Cardano. Cardano, yeah, really nice daily right there. 4 hour chart, pretty similar setup to what we just saw with Ethereum. The hourly is a little bit more forgiving. 0 at 0.87. I remember what I wanted to point out because TradingView just got this like last week or 2 weeks ago. If you are a person who has, actually everybody does, I think. Everybody has a certain direction that they're more comfortable trading. You have like an internal bias where you feel okay going long versus short. Some people who are, you know, pessimists, they definitely feel more comfortable going short than long. I fall into that category for some instruments. And in general, I think I'm more comfortable shorting than I am taking a long trade. But how you can help yourself is by flipping a chart upside down. Okay, so if you're like a permanent bear, okay, if you're constantly bearish and you look at this chart and you think, okay, well, there's easy breakdowns here that I could take a short trade on. Now in TradingView, if you right click over here on the price scale, you can go to where's that? Oh, here it is. Invert scale. Right click on the price scale and go to invert scale. And now you see it's the same chart just flipped upside down. All right. So, you know, if I'm somebody who is more comfortable going short than long, then I'm looking for a trade here on the 1 hour chart for Ethereum where, you know, I see the lagging span break below price here and price break below the cloud. That's a short trade. But in reality, that I would be taking a long. Very, very common in a lot of software. This is something that that's something that a lot of old school traders would do. I do it in my Optimus software all the time. I'm always flipping charts upside down. Okay, back here. Let's see. Basic attention token was actually kind of outperforming for a little while there. Basic attention token kind of stuck here on the hourly, stuck here on the 4 hour. It moved down there on the daily. That's actually a really good sign. I mean, I'd be long on based on the daily on a close above the baseline of this prior base at 2681. EOS. Could be a short. Although the market is so heavily correlated, you got to be careful of that. EOS on the daily, EOS on the 4 hour, on the 1 hour. Man, look at this daily chart. Look at the shadows and wicks. This is wow, it's like all over the place. I mean, there's better things to look at. IOTA. Breakout on the hourly would be pretty awesome. Breakout on the daily looks kind of bearish. Yeah, we'll see other. Nano kind of bucking the trend a little bit. Not much. Geez, look at this. Ever since December 25th, look at this flat distribution here. And this is the price range here is just, I don't know how you can get any more tighter. It's just really, really constricted. Daily, man, look at that. Well, the daily trade's actually pretty easy to spot here. I mean, the condition where the lagging span be above price and price above the cloud is pretty much the same at 41.82. I know I have some trades sitting up there actually. I have some resting orders. 40. I'll make sure I got that price right. 43.82. That's right. Okay, Nano did that. Waves. Man, I'm disappointed with Waves. Yeah. Never mind. Walton Chain. Same thing. ZRX and the others here. Everything's got a tight range. It's not showing a lot of movement, but it's also it's not showing a lot of selling off. Mondays have generally been kind of yucky days. You know, they are. If we look at Bitcoin, go to a daily chart, and let's go to. Let's see here. Calendar. You know what? I'll wait for tomorrow because we're already past our time. Got trade ideas in, did some education. Cool. Awesome. Good. Folks, this is a continuing to constrict zone. We are in the expansion month, the historical seasonal expansion month for Bitcoin, and then we get into the crazy month getting into November. But we've been talking about this for couple months now. Don't miss the bus. Okay? Don't miss the bus. But trade smart, trade wisely. Anyways, you guys have a good rest of your day. Have a great Monday. Forex Lens, folks, I'll see you in the morning. The rest of you I'll see you tomorrow afternoon. Talk to you later. Bye-bye.